All right, what's up, guys? I'm JR Herdsman. I'm going to do problems 13 to 15 with you guys. Uh, all right, let's get into it. Let me just figure out how to share my screen. All right, let's see. All right, perfect. So right here we have the problem. And so basically what we're going to do, or my initial thing when I see this problem is I don't really know what to do because it's my first time doing anything with accounting. So I honestly just went to the book and the book's pretty good because it has kind of like these outlines. So basically, what I look for is like the name of the company there. Yeah, all right, it's an income statement. So I just find the one that says income statement right there at the top, super easy. And then income statements, they are for a period of time, and so it's for a month. In this case, for this problem, it's also for about a month. So we're gonna just come over here, look for the one for month ended December 31st. And then we're going to probably be like, all right, what's next? And so basically, what an income statement is, it's just revenues and expenses added up together, and then it gives you your net income. And so we're going to come up to the top and we're going to be like, all right, well, we know for sure this has to be revenues. Revenue is basically just like the money that you're receiving from other people. And so right here, oh, I already accidentally put that when I was messing with it earlier. I couldn't figure out how to delete it, but it's consulting revenue. And so you just basically look up here for anything that says revenue. And so basically the only revenue that I could find was this consulting revenue. And so you're just going to take this 12,590 and you're just going to paste it in there. And then it automatically just says total revenues. Boom. Super fancy, super nice. And so we got the revenues, and then we need to remember what's the next part because there wasn't any other revenues. And the next part is expenses, right? Yep, expenses. And so expenses are basically anything you have to spend money on. Pretty self-explanatory, but we're just going to go expenses, and then we're going to just go and we're going to click on anything that says expenses. Boom, miscellaneous. And then let's see, the next one down is rent expense. And underneath rent expense is salary expense. Then telephone expense. All right, I think that's all of them. I hope so. It looks about right. Yeah. Rent expense, salary expense, telephone expense, miscellaneous expense. All right. So then you just come up here, copy paste all those expenses into the right ones. So that was the rent expense, right? And then salary expense is this one. And then let's see, phone expense. There we go. And then miscellaneous. Boom. All right. And so basically what your revenues and expenses added up, that gives you your net income. And so you just come down here and then you just go, oh, look, is it net income or net loss? So basically, the difference between income and loss is net income is when your revenue is higher than your expense, and net loss is when your expense is greater than your revenue. And so 12,590 is definitely way bigger than 9,060. So we're going to go with net income. And then we're just going to put in the difference right there. And I totally forgot to do the math before this, but we're going to do 12,590 minus 9,060, and then boom, 3,530. Okay, and then I'm gonna check my work. Hopefully it's correct. Okay. All right, I'm glad that's right. All right, so now let's go to the next one. So problem 14. Pretty similar. I did the same thing when I first saw it. I was like, I have no idea what I'm gonna do, and so I just went straight to the book, and I was like, all right, so I'm looking for what statement of retained earnings, and so I was like, boom, boom, right there, statement of retained earnings, and so basically, first thing we want to know, what's like the time period for this? Is it just a date or is it for like a period of time? And so for this one, it's a period of time. And so came over here. It's like obviously it's not the first one because it's a period of time, so it's gotta be for month ended December 31st. And then I went back to the book. I was like, all right, what do I need now? And so it says retained earnings December 1st. So that's like the beginning of the time period of retained earnings. And we actually already have that here, so we're good. And then we need a plus and a less. So net income, if you remember, the net income was on this previous one right here at the bottom. So it was 3530. So we'll go back. Oh, 3530. Sorry, I just want to write that down before I forgot it. Okay. And then we'll come down here and we also got to put in um, basically like what we lost, which is the dividends. So the less, and oh, I didn't really explain why we add. We add the income because income is coming into us. It's like the money we're getting, and then dividends is basically just like I don't really understand exactly what a dividends is, but I do know that you subtract it in the formula. So that's why I'm putting less. And so uh, we're gonna come scroll up here and it says cash dividends. It says 640. So we'll go boop. Oh, okay, maybe that one doesn't want to paste, but that's okay. 640. And then we'll come over here and just double check. All right. So we got the retained earnings at the beginning, good. And then we had the plus net income, good. Less dividends, good. And now we just need the retained earnings and then the final date for the period. So I'm gonna come down here. Retained earnings with the final date, not the beginning, because we want the whole period in here. All right, let's check our work. Solid. Super good. All right, let's go to the next one. All right, we're just gonna go with the standard procedure. All right, let's see what the book says for balance sheet. So, oh, look at that right there, the next one. All right, so the key kind of like three things are assets, liabilities, and equity. But before we forget, balance sheets, it's on a specific day. So they just take it on that certain day and like that's what it is. That's where everything stands. So we're gonna go look for the certain day, December 31st. Sweet. And if you remember, on the top left, we have our assets. Assets basically are just resources a company owns or controls. And so we'll come up here, we'll be like, all right, they own cash. They also have account receivables, office supplies, and land because these, oh, and office equipment, I believe, because these are all things that the company owns. And so we'll put all of those in there. So we're going to look for cash and then we'll look for account receivables. So we're putting in account receivables because it's going into the company, like the company owns it. You can't do the payment one because that's technically a liability because that's something like we owe someone else. And so that's why we do receivables. Office supplies, boom, 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 right there because it's something that the company owns. Oh, and then we got land. Got to own land for the company. Office equipment. Uh, Boom. All right, now we're just gonna copy and paste all of these numbers into it. Account receivables. All right, now office supplies. What? Come on. Okay. All right, guess we're typing that one in May. All right, 1960. When? All right, apparently my copy paste doesn't want to work right now. There we go. Office equipment. It's weird. Okay. All right. And so we kind of already talked about it, but all right. So we have all of our assets. That looks, I'm pretty dang sure, yeah, because these are all part of the other sheets over here on the right. And then over here, yep, we're good. So now we just need to look for, let's look back over here. We did our assets. Good. Now we just need to find our liability and our equities, or liabilities and equity. So um, liabilities are basically just the things that we owe other people. So if we go up here, pretty much the only thing that I see is just account payables. It's like, because you got to pay it to someone else. So not really yours. So oop, right there at the top, 7250. All right. And then I don't see anything else. So I'm just going to move on to the next one, which is equity. So we're going to skip these boxes, come right here, equity. And equity is basically owner's claim on assets. And yeah, so it's like what the owner owns. So usually these are like stocks and shareholders, I believe, or something like that. And so the only thing that kind of like the owner would be like really, really in charge of is the way that I think of it is just common stock. So just gonna go boop, common stock. There we go. 82,780. 82,780. All right, now let's check our work. Oof. All right, we're missing something. I won't lie, I don't know what we're missing. It says it's not complete. Okay. And when I watched Brother Lewis's video, there's something like usually it's like blank spaces. So I'm just gonna check if there's any blank spaces I was supposed to put anything. Um, oh, it's probably just right here, here, and here. So let's just look over here. Um, so we're probably gonna need our total equity. That's probably what we lost or what we forgot to do because this number just moved right here. So total equity, boom. Oh, we also forgot it for total liabilities probably too. Oh, there's not one for that. All right, cool. So total equity, and then over here, this would be total assets. And then over here, I assume this is just total equity and life. I mean, what do you call it? Let's see. Let's double check. Total liabilities and equity. Yeah. Okay. Hopefully this is it. All right. Apparently I missed another one, but we're almost there. We're getting there, guys. um, I feel like there has to be one for liabilities. Let's see. Yeah, total liabilities. Hmm. Here we have our cash, receivables, office supplies, land, office equipment, account payable, common stock. Hmm. Dang, it was going so smooth till this one. All right. I don't know. For me personally, I feel like it's got to be something about this total liabilities, but I don't know. I don't know how to put that in because there's not really one for that right here. So I guess it can't be that. And then equity, I feel like it could only be that. Hmm. Hmm. Oh, oh, I didn't mean to put that there. Oh man, how do I delete that? Oh, okay. Okay, so I just looked at this thing and it said retained earnings underneath equity. So maybe it's that. Where to go? Retained earnings. Now, how do I find that? Um, oh, from the last one. Okay. So if we go to the last problem, retained earnings, which is right here, 2890. It should be 2890. All right, hopefully this is it. Let's go. All right, we made it through. But I guess that kind of just shows like the book really helps because I didn't really know what I forgot, but then I just looked right here, helped a ton. But yeah, got any questions? Hit me up. But thanks, guys.